Welcome back to another Stock Market Open live stream. Today is the State of the Union, or address by Joe Biden, which will be quite interesting. That'll be later this evening, so we'll get to cover that. We'll live stream that, and we'll see what Joe Biden has to say. I think the entertainment after the fact will be the commentary from his supporters and from his detractors, as well as fact-checking. So we'll see. I'm sure there'll be a lot on the economy, which I have to say, the economy, at least from what we're being told, seems to be doing quite decently. At least we look at the Atlanta Fed, and once again on that Atlanta Fed chart, we pop back up. If you didn't see it yet, we're now at 2.5%, as well as you've got the ECB just this morning talking about how the what's it called here? Inflation target of 2% is expected to be reached next year. Now, they do mention that, and this is going on right now, this is, you've got the press conference just kicking off, basically, at the European Central Bank. Well, it kicks off in a couple minutes here. And they mention here, we're not expecting any changes in interest rates. The target of 2% should be reached in 2025, but for now they're going to hold on their interest rate movement. Their wage growth tracker, by the way, has moved a lot slower to the downside than ours have. Our wage growth has slowed down much more quickly. I'll put a screenshot up on that, or of that up in just a moment. Let's see here. Okay. So the other problem, though, that came out of their inflation forecast for this year and next year is that they see economic growth dropping to 0.6% in 2024. And most of it looks like the phrase wage appeared 36 times in the monetary policy statement. This compares to 16 times in December and 3 times in October. Boy, that reminds me of during COVID, looking at companies and how many times they wrote bankruptcy in their, in their their earnings calls, which was crazy because back in COVID, there were a lot of real concerns over companies going bankrupt. Okay, so, yeah. Okay, so less growth, but expecting to be at their inflation target next year. That's quite interesting. Okay, so that I wonder where that puts us here in America. Is there a chance in the United States we could hit that as well next year? I'm sure a lot of folks are going to be pretty hopeful about that. I certainly am included in that. One of the flip sort of concerns of that, though, which would be also very interesting, is what happens if we do get to 2% inflation in 2025, but you're still sitting at 3 or 4% rates because the Fed's worried, well, we don't want to disanchor from 2% inflation. This was something that I was thinking about quite a bit yesterday. I was looking at the interest rate sensitive sector and thinking, boy, even as rates start coming down, even if you get your 3 rate cuts today or this year, which isn't even a certainty, how do you're not back to zero, so your interest rate levels are not where you were previously, so things are still relatively more expensive than they used to be for financing. Continuing claims, by the way, just came in at 1906, about 26,000 higher than expected. Initial jobless claims, but then you had a downward revision of 7,000 for the prior. You had initial jobless claims pretty much bang on expectations, 217 versus 216. Unit labor cost coming in lower than expected at 0.4. Non-farm labor, non-farm productivity coming at 3.2% versus 3.1, so a little bit more productivity and a little less labor cost, which is pretty good. That's sort of what's been expected. Remember, the prices paid index also came in a little weak couple days ago on the ISM prices paid index at 58.6 versus 62. Yeah. Okay, good. So let's see here. Okay, let's see what else we have for the European Central Bank. Oh yeah, I really wanted to look at that wage tracker. I think that's quite interesting. The wage tracker really just started falling at the end of last year, and I suppose we should probably look at how wages moved in America relative to that. So let's try if we can get that. Let's try like St. Louis Fred. We'll go with wage growth. So I guess we could go with nominal wage growth rather than like inflation adjusted, some form of real wage growth. And what we're looking for would be the year-over-year percent change. Yeah, that's gonna be a little tricky. Okay, I'm gonna play with that a little bit. So I'm trying to see which data set to use to compare to Europe. Euro's using negotiated wages, average hourly earnings. Oh, that could work. Average hourly earnings, and then let's try percent change from a year ago on that. Huh. Yeah. Okay. Well, I'll keep playing around with that, and then I get to an answer. Yeah, I mean, I guess you could use this. Let's see, they go back to 2007, so I'll go back to 2007 as well. And yeah. Okay. So one of the issues, remember, when it comes to wages, I'll compare these shots here. One of the issues when it comes to wages is this idea that services are just going to continue to be expensive and continue to drive inflation in America. This has kind of been something we have seen in the last inflation reports. There's still this idea that a lot of the inflation we're seeing, though, is lagging. But, you know, I think it would be very wrong to say that, oh, with certainty, inflation is solved when it comes to services. There's certainly still heat there. You got the goods deflation. I think that's been very clear in earnings calls. Most goods providers discuss the rampant, almost disinflation we're facing right now, which is nice. I mean, you look at even a company like Costco kicking butt in terms of lowering prices, but that doesn't necessarily mean their human resources costs fell, that their OPEX is falling. You know, Costco actually reports soon. I think it's today after the bell. Let me take a peek here. Costco earnings estimates. So Costco, let's see here. Implied one-day move 6. Yes. Confirmed for 415 today on Costco. Wage comparison of United States year over year versus Eurozone. Okay, yeah, there we go. Cool. So now we can talk about that. Pop that up right here. Let me refresh. There we go. Okay, so this is what I just wanted to compare to. So here's the Eurozone year-over-year wage growth. And this is not inflation adjusted. And so you could see here this sort of rotation finally down. But it's a very slow rotation down. Whereas here, we've had this rotation down in wages since about 2022. But you've started to see a rotation up. So if you look at like a 12-month average, you'll see that similar kind of decline. But on just sort of a month-over-month basis, you're starting to see it somewhat tick up again. And it's a little hotter than where you'd really want it to tick up. It's sitting at about 4%. Your ideal target here would be about 3% for wages. So we'll write that really quick. Target is 3% for wage growth to meet a 2% inflation standard. There we go. So you know who would probably have a good sort of like 12-month average of this? Nick T, frankly. I'm sure if I go to Nick T, I won't have to scroll far to see wages. Actually, his very last tweet has to do with wages, but that just has to do with job openings. So then we look at multivariate core. We've seen that. Oh, multivariate core, nice little trend up. How interesting. That's a good one to look at too. Let me grab that here. Multivariate core inflation. Not excellent. This is actually precisely why the Federal Reserve might end up kicking the can a little bit on being too early to declare victory here. So you can see that here, multivariate core trend. Take a peek at that. You've got this tick up here in not only the probability band, but also just multivariate core. Okay, so let me see here. Yeah, back to ECB. The nudge down in the inflation forecast is seen as a dovish signal, pricing in a June cut with increasing confidence. Okay, so let's consider that. Okay, June, and let me see here. Let me take a quick peek to see who this is. We got over here.
Is struggling because it's been 40 years it's been this expensive to own a home. Interest rate cuts make that a lot easier. 30 years since it's been this hard to put food on the table. Interest rate cuts.
Yeah, okay. This is more of just this is more of just politicians talking about you know, oh yeah, we're gonna go beat up Jerome Powell. Don't you worry, we're gonna go kick his butt. So anyway, okay, good. All right. So June cut for ECB priced in, dovish on inflation, bearish on growth. Growth dropping to 0.6% versus 0.8% for 2024. And again, their expectation is that inflation will hit 2% in ECB, or in Eurozone, I should say, in 2025. Cool. All right. So then the next thing is the United States. The United States is going to have to get that multivariate core back down. Multivariate core inflation. This is just another way of measuring. And what we can do is we can actually go into this decomp section here, and we could look at, let's look at just services X housing and take out everything else. Yeah, so here you could see that services X housing number on the multivariate core measure coming in at 0.7, which obviously annualized is like 8.4%, which is just way too high. It's significantly down from where we've been here, where we were as high as 1.5%, but it's certainly way above the levels we had previously seen, where you're sitting at closer to, well, quite frankly, 0. So, big difference there. All right, we're going to grab a little screen grab of that, throw that over there. All right, now let's go take a look at what some of the pre-market is doing here. So let's go look at the Qs. Okay. So on the Qs, we've got 64 bips. You've also got the, let's see here. I'll drop the BTC peak here. Okay, so still sitting at about 67,000 here. This is sort of on the minute chart here, getting some volatility here. I saw us in the 67,000 range here a little bit ago, but yeah, look at this. I mean, just on the day chart, pretty clear here, knocking on the door of that 69K resistance. Here's that hourly chart showing you a double rejection there, just on the hour chart, which isn't as big of a deal, but double rejection there at 69, which does mean it should be pretty dang powerful when we break that 69K. That since that was an all-time high, you're really going to uncharted territory after that. But it's possible that could be what gets Bitcoin up to 100,000, especially since you do have a lot more institutional allocation pushing through on these Bitcoin products, which I think you're getting a lot of people who are, oh, yeah, invest in my fund. It has 1% exposure to Bitcoin, and everything else is, handpicked or whatever. It's almost kind of like a checkbox. I feel like but that was always the idea, was that after Bitcoin ETFs, a lot of folks thought the institutional adoption would be pretty vast for Bitcoin, leading to this sort of basically supply shortage in an environment where very few folks are selling, mostly because that institutional allocation is probably just beginning. Treasury Secretary Mnuchin scored a deal over here on New York Community Bank. One of the reasons this stock fell so much yesterday is there was this fear that the company was basically just going to have to sell a bunch of stock really cheaply, and it would probably send the stock to like zero. It would destroy the stock's ability to exist. That didn't end up happening because Treasury Secretary Mnuchin, who now works with like the Saudis in investment products and private wealth funds, they scooped up New York Community Bank, like 40% of the shares at some form of like $2 price with some, I want to say it was like some $2.40 warrants. So in other words, they got a pretty good deal, and they got themselves a wedge deal on a bank. If you want to learn how to get a wedge deal on the bank, check out the course on bank hack. No, I'm just kidding. The problem with that is you'd really have to have multi-billions of dollars sitting around to get a wedge deal on a bank. So you've got to be able to cover all their poopsie doops. So that's why you saw this sort of movement, and the expectation is you're going to see a lot more of that kind of banking consolidation or the ownership of banks really changing hands. We shall see. All right, so what else? What if Fed says they are all data dependent, but they end up cutting just because it's an election year? Well, I think they're trying their best to communicate mostly clearly just on rates. I mean, obviously, feel pretty lied to about their standard. This is supposed to be the standard at which they decide policy by. That their flexible average inflation targeting standard was a lie. That's a little bit of a pisser. And sure, they could be lying about other things as well, as they probably are. But the one thing they tend to try to be pretty clear on is their expectation for rates. And unfortunately, yesterday you had expectations for rates fall. It was, who was it? The guy with the K. Oh, why can't I think of his name? I'll find it here. But anyway, one of the folks over at the Kashkari, that's what who was. Yeah, I'll write it down here. Kashkari. So Kashkari yesterday, he gave us a little bit of bearish hawkishness. The comments from him indicated the possibility of 1 or 2 rate cuts in 2024. So that wasn't great. He's the Fed Minneapolis president. Let me see if he's actually a voting member. Voting members. Let's see here. Voting members. No. Okay, Kashkari's not a voting member, so he might be just sending his... He votes in 2025 as an alternate. Okay. Voting as alternate in 2025 and not in 2024 sees 2 rate cuts in 2024, maybe just 1. See, the Fed almost wants to make sure that they don't seem political, and so there's this thought that maybe they'll actually purposefully wait on some of these rate cuts. Jay Powell will speak again in Congress today, but honestly, I don't expect him to say much different from yesterday. So what I usually do is I only cover the first event. I don't cover the second day. I mean, if people really wanted to, we could, but usually I expect most of it to be pretty dang boring and pretty much the same. But then again, you know what, maybe I'll just run a quick little poll here. And, yeah, so he's a spokesperson. Yeah, they do that. They do that. I think they kind of purposefully use a non-voting member to go send some hawkish or dovish signaling when they need it. It's all a manipulation, I feel. But okay, let's run the poll here. How am I gonna do this? Poll plus start poll. Should we cover Jerome Powell in Senate today? Might be pretty similar to him in House yesterday. Yes, cover it. No, just summarize later. All right, here we go. All right, well, I'm running that poll so we could see. Let me see what his rationale was. I remember reading this last night. It's hard for me to see that data has come in that's saying more cuts than I said in December. Okay. Hard to see data that says more cuts than projected in December. Less, more likely. Base case, it's going to be dependent, well, it's going to be dependent on inflation. Bloody, 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 bloody. We'll have to we have a run rate that's very attractive. People have jobs, businesses are doing well, inflation is coming back down. Why do anything? I mean, you can't really argue that logic. So, why do anything if eco is strong? I mean, I suppose you could, in that usually the Fed takes the the escalator up and the elevator down when it comes to rates. So that's always a possibility. And that's just basically a way of saying something ends up breaking, and then they drop rates really, really quickly. Core trend. Core services on multivariate core at 0.7% for January, which annualizes to 8.4%, and core trend has begun to re-accelerate. Okay. All right. All that's at ehack.com as usual. Let's see what else we had here from yesterday. We covered some institutional inflows. Yesterday, on the 5th, we saw $648 of net inflows into Bitcoin. That's the highest so far. BlackRock alone accounted for $788 million of inflows. Grayscale Bitcoin Trust, $322 of outflows. Mostly, their fees are pretty high, so a lot of people have kind of been taking their money out of there and putting it into other ETFs. And they're at like 1.5%. Let's see here. Yeah, the average inflow per day right now is about 231 million, with only about 900 Bitcoin or about $60 million being mined per day. So in other words, wow, that's basically an excessive supply shortage at a time of increased demand. Hey, that sounds a lot like COVID. Let's see here. Yeah, all right, we'll save that. Okay, so then you've got Salesforce. Yeah, we got some comments on some of the growth rates of some of the other companies here. For example, you've got Salesforce, market share of enterprise software at 22%, Microsoft at 5.7%. They've got so much consumer end software as well. They're trying to push the AI narrative with their AI model. Yes. I still can't get over how I don't believe that Einstein AI is really that strong yet. You know, you see a lot of Einstein usage for some chat support, summaries, answering questions, voice to text records. Okay. Yeah, there we go. Okay. So, and then of course yesterday we talked about the Palantir contract, which was neat. Okay. All right, very well. Let's take a peek here. What do we have here?
What most of that money will do will go to support American defense industries here in the U.S. to restock the stockpiles that have been depleted by the transfer of material and weapons to Ukraine over the last 2 years. So I think, people think we're sending a big check to Ukraine. It's really not the case. 80% of that money is going to be spent right here in the U.S., and it's going to go to replace stockpiles of whether it's HIMARS or whether it's Patriots or missiles. But those are American jobs it's going to create. It's not welfare to the Ukrainians.
Look, a lot of people will say, though, why should we be spending that money to help other people overseas when we have so many problems here at home? How do you make that case to the American public? Well, outside of the jobs equation, what's the security situation for the United States?
Well, look, the security situation is I think, paramount importance that people understand. The fact is the Ukrainians are fighting an existential battle for their existence. And we have a moral obligation to defend that democracy. And the fact is, if we don't help Ukraine defend democracy, there's no telling where Putin ends. Would you want to be in the Baltics, Estonia, Latvia? I mean, can you imagine if all of a sudden, Putin decides to take on a NATO ally, and then all of a sudden you're talking about American lives, American military supporting our NATO allies. It's an existential threat to democracy, but one that we can afford. I think, again, we're not talking about the difference between guns and butter. We're not giving short shrift to Americans in any way, shape, or form. But this is money well spent. And again, keep in mind.
Okay. So, gotta help prop up the spending on Ukraine. This is the Raytheon CEO. The company's now called RTX. And imagine that. The CEO of Raytheon suggesting, a defense conglomerate, mind you, suggesting that we must defend Ukraine. Please buy more guns. And by guns, I mean aircraft engines, cybersecurity, guided missiles, air defense systems, satellites, you name it. All right. Very well. So, let's see. I wonder how they've been doing. Let's take a peek. Bookmarks. Oh no, RTX. Yeah, sorry. There we go. Okay, so here's Raytheon. Let's actually just go to the week chart. Raytheon over time. Wow, they still haven't recovered to COVID prices. $92. Right before COVID, they were as high as about $1.40. All right. So again, State of the Union today. Tomorrow we'll get the jobs report. Today we'll also get Costco. So we should write down some catalysts. So let's see. We have Costco at 13:15 after the bell today. It's Pacific time, 1:15. So we'll be watching that. Then you have jobs tomorrow, jobs report tomorrow at 5:30 PT. Now, if I look at the jobs report for tomorrow and the forecast, we're looking at 200K jobs expected, with an average hourly earnings month over month of just 0.2. Average hourly earnings of just 0.2 projected. And that's off of the 0.6 that we had in the prior read. So we'll see what happens there. All right. That'll be interesting. Broadcom reports today as well. They are in a partnership with Cisco and AMD for creating some ultimate Ethereum consortium to try to beat up on NVIDIA. Broadcom reports after the bell. And so does Marvell and DocuSign. Broadcom, Marvell, let's write those down. DocuSign, also report after the bell. You do have Kroger and Burlington that look like they're probably just now reporting. Let's take a peek at them. Kroger. All right, if we look at Kroger EPS projected to be, okay, that's a beat. Kroger at $4.40 for the fiscal year, $4.40 of adjusted EPS. The expectation was $4.28. You've got sales of $37.06 billion versus the estimate of $36.7 for Q4. So Q4 comes in a little softer on sales. Adjusted EPS still beats. Kroger plans to balance its investments, including lowering prices. So interesting. Their adjusted EPS numbers are beating. Let's write that down quickly. Adjusted EPS beat 440 versus 4.28 for 2024, and plans to balance investments, including lowering prices. That's nice. So we are seeing the disinflation occurring. Again, the question becomes, when does that disinflation occurring lead to rate cuts? And then when do those rate cuts actually fall low enough to make a meaningful difference to demand for interest rate sensitive products? So we shall see. All right. That's Kroger. Now, in addition to that, we've got the Burlington Coat Factory. Burlington stores. Yeah. Okay, here we go. Burlington this morning sees Q1. That's a miss. They were expecting adjusted EPS of $1.11. They missed and came in at closer to 102. Q4 comp sales came up 2% though, rather than the negative 56 basis points they were expecting. Adjusted EPS in Q4 did beat at 366 versus 330. Let's see how the stocks are moving on that. So you've got Kroger. Kroger's up about 4.2%. And then Burlington, you're up about 5% after that news. So a lot of green today. You've got Enphase up 0.9. Tesla's the one that's really getting hammered. One of the problems that you have with Tesla, yeah, you're at 174. You're below support here. Not a great place to be. One of the big issues that you face with Tesla is declining delivery estimates. They seem to be getting worse and worse every day. The Wall Street estimates, as well as estimates, from followers like, for example, Troy Teslike on Twitter or whatever. Expectations for deliveries for this year continue to decline. Remember, last year we delivered 1810 vehicles, so 1,810,000. And there are now projections that you could come in as low as 1950. So if I divide 1950 by 1810, you're looking at maybe 7.7% growth. Whereas the highest expectations are that maybe we can come in at 2100, which would be 16% growth. So you certainly lower the growth for this year. And that's, Tesla balancing price cuts and margins and subsidies. Other vehicle manufacturers, for example, might throw in, we'll get you financing at 0% or 1.99 or whatever. I think Tesla right now is mostly still financing in the 5.99 range, but I'll go look at one really quick. So if I look at a Model Y, 42K. One that doesn't qualify for the, and the limitations on the tax credits have been a little annoying too. But if I look at financing now, 6.49% APR. So if I do, it's actually not bad. I mean, it still feels way higher than what things used to be. But if I do $4,500 down at $4,200 on a Model Y, I'm at $667 a month on their finance calculator over 72 months. Doesn't seem that horrible. Then let's compare that to, like, I don't know, if I go to like Ford. So let's see what they're offering. So if I go to Ford vehicles, let's say I want to buy a Ford Bronco, the $39,000 one. Build and price. Let's find some incentives to compare. Okay. Find it for you. I really don't care to select the model and all this stuff. Alright, I guess I have to. Alright, let's just go with here. This one, $43,000. So I'm just picking a $43,000 Bronco, and all I'm trying to find is if I go to the summary, what price are they going to give on financing? Oh, you got to put your info in just to get a price? No, they're going to bother you. I don't want to do that. Yeah, lease payment would be about $600. Here, finance. Oh, I got it. Oh, see, that's at 7% APR. So they're not necessarily doing too many discounts there as well. And I mean, those are probably already discounted off of where rates realistically should be, based on the 10-year and the spread between the two. Well, the 10-year is down at 4.075. Let's look at the 5-year break even. 5-year break even. It's at about 2.4. So it's definitely ticked up quite a bit. But we are seeing some of it come down a bit. Okay, so talked about Kashkari, talked about the ECB, although we might have some more updates coming through from the ECB in a moment. I'm kind of watching it. And then you have the U.S. government spending $3.5 billion on Intel. Yeah, I wouldn't be surprised if there are even more reports of spending for Intel. I think they're trying to get $10 billion in CHIPS Act funding, which, yeah, they're already set to receive both grants and loans to the extent of $10 billion from the CHIPS Act, plus now negotiating another $3.5 billion. Wow. Yeah, they're getting what we call in the office the Biden bucks, the good old stimmy checks for manufacturers. Let's listen in.
Danilo said something this morning, Dave. I wanted to get your feeling on this. He said NYCB now has a fortress balance sheet.
Yeah.
How do you feel about that?
So it's similar to J.P. Morgan's?
Yes.
Yeah.
Just we are often criticized. I mean, look, J.P. Morgan is the gold standard. I think this is could work out for everybody. I'm just saying that unlike IndyMac, this one could be a little dicier. We don't know. Now, they're saying there's conservative the conference is going on, conservative underwriting standards. But, David, in 2019, when the law changed, you used to be able to renovate these apartments and be able to
Right, and then increase rents. And then the New York State legislature moved in.
Right.
And they think everybody should just be able to,
well, I'm just,
never have a rent increase.
I'm not saying I'm necessarily defensive about Mr. Secretary. I think he did a great job, whatever. But I'm just saying that their articles just say, you know what, he got in there, he got a great price, whatever. And the best price would have been if you let it go. If you let it go. No, I'm saying he came in the middle of the day.
All right, New York Community Bank stuff here. Hopelessly Optimistic asks, how do you get your Mac to keep charge at 80%? And then somebody asks if I saw Palantir. I did see Palantir. You know, I've got some decent exposure to Palantir. I think it's Palantir was AI before AI was AI. You know, they were big data, and I think they are totally underestimated for how valuable they actually are. Like, they are what, this whole AI revolution is all about. But yeah, this comment here about 80%. I don't know. I'm sure there's some kind of battery setting here, but as you can see, this sucker always charges to 80%. And it says here, charging on hold, rarely used on battery. Yeah, this thing basically just doesn't leave this spot here. I really dislike moving devices around. Mostly because if I move devices around, then they're not there when I need them. Oh, let's see how that poll went. So, 44% of y'all said cover it. 56% of y'all said summarize it later. Yeah, I don't know if I could really bring myself to sit there for another 3 hours. It was very boring yesterday. Let's see here. How low can Tesla sink? That's I don't want to sound like horribly bearish. The issues that you have are what are you going to end up getting out of the earnings reports over the next few years as growth basically falters and you don't get guidance from Tesla. The time that Tesla will start doing well is when the market starts pricing in growth again, So usually you have to go, you have to hit a bottom, and then you have to start breaking that bottom. So the question is, are margins at bottom? Maybe, let's see here. Tesla, if I look at Tesla historical price average, let's see here. We've had, looks like we've been somewhat stable on the Model X. You've been, on the Model S, you've been kind of stable so far. The Model Y's been also stable in 2024. The Model 3 did have price cuts in 2024. And that's driven, oh yeah, you had about a $4,000 price cut on the Model 3. That's probably because of the loss of the tax credit. So you'd almost expect similar margins. I'm going to write that down, or we'll take a little screenshot here. Okay. So let's see here. If we go to their earnings call, we'll be able to get a little bit more insight. Or sorry, not their earnings call, just their 10Q, Tesla Investor Relations. And we really want any kind of commentary on margin that we hadn't seen previously in their slide deck would be good. Because this is actually their 10K, which it usually takes them about 3 extra days to file their 10K. 10K is right here. So, frankly, we could just go to look at margin. The long-term success of this business is dependent upon increasing margin through greater volumes. We continue to increase the production of our energy storage. Yep, that's true. And energy storage is facing the same issues that a company like Enphase is facing, which obviously, I mean, they're getting hopefully close to bottom. One of the issues you have with this is obviously NEM 3 in California. In the long term, NEM 3 will actually be better for Tesla than bad. Mostly, and the same will be true for Enphase. Basically, what NEM 3 did is it said, hey, you have a $20,000 solar panel system. That's great. Now, in order for you to make sense of it, you're going to have to add a couple batteries. Now, the economics of it will be better. Like, your break-even cost might be lower in the future, or you'll make more money, whatever. but instead of spending $20,000, you're now going to spend $50,000. That's great and all when rates are 0. But it's not so great when rates are 5.5% and the economy is booming to the point where the Fed's basically saying, yeah, JK, we don't really need rates to come down that much. So NEM3 will continue to have its impact probably, again, until rates come down. The question is, like, when's the bottom? I mean, technically, end phase already bottomed out. And so a lot of folks are looking at Tesla to say, oh, can Tesla bottom out too, like end phase? Look at end phase. You went from this bottom here, if you perfectly nailed it after earnings, the second to last earnings, you'd be up at 126. But nobody who was actually paying attention to end phase, I think, was actually buying it at 73. I mean, maybe you add a little bit to your portfolio, right? But 125 it's still down from where it's been, and it's way left behind on the whole everything rally. Same thing with Tesla. I mean, Tesla's down 1% here in pre-market. Again, the big concern being, you know, how much are we going to underwrite a slowdown in growth of this company, and how much are people going to care? Like, the way I look at it is always on a 4-year weighted average basis. You know, let's say you go 0% growth plus 30 plus 30 plus 30, 90 divided by 4, that puts me at 22.5% growth. Well, the price of Tesla keeps falling, so its valuation starts looking better. See, if I go EPS here through, yeah, but that EPS guide might miss. Let's go with 290 for EPS for 2024, and then I'm going to divide 176 by that. Puts me at about a 61 peg. 61 divided by 22 puts me about a PE. Puts me at about a 2.7 peg. Well, there are a lot of companies that don't have the structural headwinds of interest rates staying higher for longer, and that's probably why Tesla's lagging so much. It's like, if I'm going to spend on a stock that's a 2.7 peg, why would I buy Tesla when I could buy, you know, Apple or Microsoft or whatever? Yeah, Apple might not be the best example. They've got some negative sentiment here at the moment. Currently expect our CapEx to exceed $10 billion in 2024 and to be between 8 and 10 billion in each of the following 2 fiscal years. Likely to see heightened levels of CapEx during certain periods. Okay, that's fine. Here are obviously our automotive margins. Well, these are automotive revenues right here. Talk about the regulatory credits. Here we go, costs. So for the year, cost of revenues for, let's see, for Tesla, we have 79 billion of cost of revs, and we have revenues of 96.3. That's for all, including energy. So including the energy segment, 79.1 divided by 96.3 puts you at about a gross profit of 17.9. And if you just look at automotive, including credits, you're at 19.4. Yeah. And what's interesting is they'll add some commentary here, just comparing the gross margin. Gross margin for automotive decreased from 28.5 to 19.4 as compared to the end of 22. The decrease was primarily due to lower selling prices on our vehicles, partially offset by a favorable change in our average cost per vehicle, thanks to the manufacturing tax credits. Yep. Cost of energy and storage revenue increased 35%. Megapack deployments. Megapack deployments are still a fraction, though, of your actual income over here. So you're really right now just focused on that automotive gross margin. The question is, you know, Tesla will boom if they can get that back over 20%. That's something else to consider. So, you know, if they could show increasing margin with these, with maybe stable vehicle deliveries, maybe it could be offset. Maybe it's not necessarily as bad. Who knows? All right, let's listen in here for a moment. Breaking news, they say.
Well, as we've been discussing, we're keeping an eye on shares of New York Community Bank. This after the bank did raise more than $1 billion in equity from an outside investor group. Joining us now in a CNBC exclusive is Steven Mnuchin. He's the former U.S. Treasury Secretary.
Oh, there
founder
he is.
Of
there he is, the buy the dipper on New York Community Bank. Look at this guy. Him and Larry Kudlow when they worked for Trump. Now they're off slinging billions of dollars around. Well, Treasury Mnuchin is.
Into NYCB, and I guess I have to wonder why, when only a week ago management identified material weaknesses in the company's internal controls related to internal loan review, and analysts will still point out that the business model is still very much overweight some of the least desirable parts of the commercial real estate market. So why is this a good investment?
Well, first of all, it's great to be with all of you here today. This is a business I've known well for a long period of time. So we looked at a long time ago potentially merging One West with New York Community, so I've been following it. And more recently, when they did the Signature Bank deal last year, I followed it as well, which I think was a very attractive deal for the company, and particularly bringing the two franchises together. So at the end of January, the company announced some issues associated with cutting the dividend and increasing reserves. I reached out to the company and began a diligence process in case they wanted to increase capital. And it was really at the end.
He's just reading his script, by the way.
Forward very quickly. So I like the franchise a lot. It's a top 20 bank in the U.S. with very attractive markets. It's got a great branch network. Unlike the banks that had problems last year, this business has 80% of their deposits are insured, so it's got a very stable deposit base. And the issue is really around perceived risks in the loans. And with putting $1 billion of capital into the balance sheet, it really strengthens the franchise. And whatever issues there are in the loans, we'll be able to work through. And bringing Joseph Otting in, who I worked with very closely in One West and then as controller, you know, I think there's a great opportunity to turn this into a very attractive regional commercial bank.
And you're confident that they have effectively recognized some of the risk within the portfolio itself? I mean, again, in reference to the fact that they did cite, and we know that there seem to have been material weaknesses in some of their internal controls in terms of reviewing loans. Do they still have a ways to go there? What gives you the confidence that that loan portfolio is as strong, or perhaps as worthy at least, as you seem to indicate?
So let me just say, Sandro, who was the chairman and you know, did the Flagstar deal, when issues came in, Sandro took over as executive chairman and stepped into the CEO role and really did a great job in a short period of time, really on this. And we did extensive diligence on the large loans. You know, the bank will look at the reserves and we'll make sure over time it has the appropriate reserves. And that can be done through a combination of our capital and earnings. We cut the dividend down to $0.01 a share, so we're going to retain almost all of our earnings. Yeah. And we think the asset side is very manageable. The bank has today about 11% Tier 1 capital, about 10% CET1. And if we need to take more reserves in the future, which we'll carefully review, we clearly have the capital base to sustain that.
All right, Mr. Mnuchin, it's great to have you on. Thank you. I do want to go over some of the portfolio issues. 1/5 of these loans are tied to New York rent-regulated multifamily. That law changed dramatically since many of these apartments were lent to. You do have a lot of criticized loans, including $552 million, we know, potential loan losses involving a co-op, involving office space. What makes you think, in light of the fact that this company, I will willing to say, was offering some suboptimal financials, that you really have a handle on how bad this bank is?
Well, let me just say, I think that co-op loan was really a one-off situation, and I think they've either sold it or they have it committed to sold. I don't know if it's closed yet, but that was really a one-off situation. Look, we understand what's happened in the rent.
That's what they all say right before a real collapse.
These properties with the idea that they could convert them and raise rents, and they're not going to be able to. But there's a lot of people in this portfolio that didn't. A relatively small part of the portfolio are large loans with 100% rent stabilization. when the bank made these loans, they were very low LTVs. So I think there's a lot of cushion in it. The good thing is, look, I think interest rates are going to come down over the next 2 years. The great thing about multifamily is, unlike office, they have cash flow. With lower interest rates, that's going to help a lot. And there clearly will be some problems in the portfolio. There's no question about that. And we've taken that into our account in the underwriting. And that's why we raised $1 billion of capital. So, any issues the bank has with needing additional reserves and problems, we'll be able to deal with.
Okay, so Mr. Secretary, we know that...
Yeah, we'll buy more shares from them at a discount. That's what he's saying. It's kind of, I don't blame it. You get it for like a 50% discount. You can't really blame the guy.
What I can just say, that have to be some sort of refinancing. Are you taking that all into account and feeling confident that maybe the value of real estate's better, or that maybe the 2019 law will not be as prohibitive for the rest of the properties?
I'm not taking into account there's any changes in the law. So we understand the law and the impact. Let me say the bank was very smart. When they did the Signature deal, which was an assisted deal, they left the bad loans with the government. So you can assume those were the worst loans. And they were sold at distressed prices to, real estate funds. So, I think that was a great transaction. When they did it, they got cash. They didn't take any of the bad loans. And look, we're going to work through these loans over time. I would just put this in perspective. And again, these are approximate numbers. But when we did the deal yesterday.
Yeah. Okay, I'm gonna poll the audience here. What we're gonna do? We're gonna poll y'all. Let's see what y'all think in terms of how many rate cuts are we gonna get this year. Barring nothing. How many rate cuts this year? 0, 1, 2, 3. Well, I'll do 0, 1 to 2, 3, or 4, or 4 plus. There. Okay. Running the poll. So, see what you think. That's on YouTube, that poll. See what you think about that. All right. Next. So, pre-market. Okay, Tesla's down 1% in pre-market. You've got Eli Lilly's down a little bit as well, 125. American Homes for Rent's down about 1.4. NEO's down about 1.9. You've got SQQQ down, of course, because that sucker keeps rallying. Rivian's up 5% today. I know they've got an announcement today. Palantir's up another 4% in the pre-market. Matterport's back at $2. New York Community Bank, they're up as well. Nvidia up at $900 right now. Dell's up, Enphase up, C3. Everything's just up. Everything's up. Except Tesla. But that's kind of normal at this point. All right, let's keep listening here.
Lower interest rates. You can work out a lot. On New York office, where you have empty office buildings of Class B, there's a reason why the values are down a lot. And I don't see New York office, particularly Class B, working out in, getting better in the future. So that's not an area. We've taken that into account. It is a limited part of the portfolio. We have a lot of flexibility. We have the ability, as I said, to build reserves as we need it. We can work through that. And, look, this is, it's rare to be able to come in and buy into a top 20 bank in the U.S. in great markets with great branches, terrific private wealth management teams that came from Signature. I'm looking forward to visiting with them next week. And, this, I believe, is going to be a great franchise over time.
Mr. Secretary, I imagine lots of opportunities cross your desk. I wonder if you'd entertain a question about the degree to which you see stress or duration risk across the spectrum of regional or community banks right now.
Yes.
Well, there's no question that higher interest rates and credit losses have an impact on, kind of regional banks. And look, maybe there's opportunities for us to do acquisitions over time. That's something that we don't really plan.
Yeah, he wants to do more. Buy more banks.
When we bought IndyMac, we did 2 follow-on acquisitions with the FDIC. the good thing about being a bank is if there are assisted deals to do, it's a lot easier to do them as a bank than as a private equity firm. So, we'll be looking for the right opportunities if they exist.
Yeah. Did the FDIC err in giving this signature portfolio or, passing it along to NYCB, given it took them past that $100 billion mark, which brought more regulatory scrutiny and requirement that they didn't seem to be prepared for?
Well, look, there's no question, at the time they wanted to do a deal quickly. It was important to stabilize the deposits. I think they did a good deal with New York Community Bank because, quite frankly, it strengthened New York Community Bank to put that franchise. Obviously, if J.P. Morgan had wanted to buy it instead of buying First Republic, they would have bought it. But no, I think the FDIC did the right thing. And again, I think you see this as we were able to raise capital. We were able to stabilize the bank. I obviously had extensive conversations with both the Fed and the OCC over the last few days. And they've been very supportive of us moving forward with this investment.
Steven, was there another bidder or anyone cover bid? And also, are you going to change the name of the bank? It is a great bank in the Midwest. Or are you going to want to be even more of a regional and just focus on New York?
Well, I can't comment on the other bidders. There was a group.
Yeah, it doesn't matter. Okay, so let's see. We are now 3 minutes away from the bell. Somebody here says, Kevin, do you think Elon is purposely letting the stock drop so for his next comp plan he could show the stock was low and bought it up? I don't know. You can't put anything past Elon. I mean, I don't think so, but I suppose there's always a chance of that. I guess if there's one wish I had, it wouldn't be that. Like, that wouldn't matter so much to me as just having a CEO. I feel like we kind of don't right now. I feel like we have a chief border patrol officer on Twitter, on X, and I mean if we counted political tweets versus or border tweets versus effort into talking about the Tesla mission, you'd probably be like 99-1. And it's kind of crazy. Like, okay, maybe not that bad, but it'd certainly be 10-1 or 20-1. SpaceX gets more attention, which is fine. Like, they're doing some cool things with their liftoffs and that. But the quantity of posting political stuff that is actually divisive and potentially takes away customers is a little concerning. But oh well. What are you going to do? It is what it is. So, next, bell in a couple minutes here. So, here you go. We'll see. I think it'll be a big day to see how Tesla moves, especially since those earnings estimates have been starting to get revised down. Once the earnings estimates get revised down, though, maybe the actual movement will change a little bit. Remember, you had Goldman and Morgan Stanley kind of poop on Tesla the other day as well. So sometimes after you get some of those poopy Wall Street press releases, you do end up with a weaker stock performance over the next few days. And once you kind of get past the rubber band of that pain, you might start seeing some growth again. So, okay. Bell's in about 20 seconds here. And I'll get some more info as well on Tesla in a moment.
Great to see you guys.
Jim, as we await the opening bell here, thoughts on that conversation?
Well, look, I've got to tell you that I think that we had a black hole developing here. It was not affecting the other banks. They were all going crazy. It's so different from last year. There's such faith in the banking system. This year you have this one right, all right, pay back. And frankly, if it rolled over, I don't think it would have hurt the rest of the banks. Weren't you surprised, David, at the strength of the banking group during this period of the turmoil? All
right, we got a little red candlestick there coming on NVIDIA right at the open. Maybe some profit taking or some insider selling. We did hear that we did have an insider sell about about $170 million worth of stock. You've got Tesla's trying to green candlestick right now. You're still down about 1%. We'll see where it goes. Super Micros up 74 bips. You've got Q's trying to go green there. Novo Nordisk just passed Tesla in valuation on their weight loss drug. Palantir's up almost 3%. Let's look at Novo. Novo Nordisk up about 6%. So they're getting a bit of a red candlestick, whereas Tesla really seems to be trying to get back to that support level here. It's only down about 60 basis points right now. And the current street numbers for the quarter are still suggesting 490,000 deliveries for Q1. A lot of sort of off consensus estimates are suggesting we could be as low as 420,000, which would be less than what you had last year. But as long as the market's aware of that, it doesn't keep falling, could be a good thing. Tesla's about to go green here. It's definitely got some buy the dip action going on. So then you've got 67.3 on BTC. Enphase, it's got about 1% there, 7% on Novo Nordisk, and Tesla
gain the lead.
Bobbing around now, 10-ish basis points. Look at that, trying to move. We'll quickly look away. Might try to go red again. Nvidia dropping a little bit. Apple still stuck at that 169. You know, 169 is another Fibby level for Apple, so it's a big deal when it sits at 169. It is. It's exactly at that Fibby right now. It's been there for the last day or so. Google's a little bit in no man's land. ARM's up again. A lot of volatility here. You get a few red days in a row, 2-3 red days in a row there, and then it tries to climb again. DWAC's been another one of the volatile ones to play for trading. It's funny. It's almost every time after Trump. It's like a pattern. Almost every time after Trump wins something, the thing plummets, just sort of on the next day, and then it slowly climbs back up for as people set up the next trades. Lemonade, let's look at Lemonade. Zoom out for a moment on Lemonade. Go to the week chart. Oh yeah, look at that pain on Lemonade. It's just scraping along the bottom here, and it's been doing so for quite a while now. Enphase almost up 2%. Tesla almost up, well, we're up about 0.5% right here. Toll Brothers up another 137. Matterport 77 bips. Marvell 161. Stellantis 85 bips. Rivian $3.60. Sorry, $3.68%. Oh, gosh, why do I keep saying dollars? 3.5-ish% on enthusiasm over the new vehicle announcement coming today. All right, let's briefly listen here, and then we'll cover some other news. Someone says Bitcoin's taking off. Let's see if that's true. Take a quick look over at BTC. Yeah, it's doing pretty well right now. You've got Tesla up now 1%. Yeah, look at that. In just the last minute candlestick here, a nice little surge there on BTC. Now sitting at 67.6. Very good. All right, let's listen in here. Oh, wait, sorry, I didn't show it. Yeah, there you go. Now you can see it. Very good. Okay, let's listen it over here.
Mizuho goes to 1,000.
I was waiting for
Don't forget, Jensen's keynote is on the 18th.
Yeah, I'll be out there to see Jensen.
You are going to go?
Yeah, I got to. I mean, it's a pilgrimage, and many people are taking it. I think
that's on the 18th. I don't know. Is that going to be the top? Is the NVIDIA event the top of the AI movement? Oh, no. That's on the 18th. Mark your calendar for it.
He's going out everywhere. Of course, he's doing sovereign AI. So this week was devoted to healthcare AI. But what he's really doing is trying to create the 3 to 5 year vision that I think makes it so people feel very excited about a $1,000 price tag.
Meantime, people are starting to pick apart the stocks because there's a healthy population of both underperformers and overperformers. Micron today, Stifel goes to buy 120.
Very interesting. That cycle, you always have to get ahead of the cycle. That stock is either the best performer in the S&P or worst performer for several times. And Sanjay Mehrotra was not bullish at 65, 68, which is when you had to buy it. But that's because he's not a hype artist. I think it might come down to Broadcom. Broadcom, David Hock-Tan, has some very good exposure and is a good partner of
yeah, we'll get some of those numbers today on Broadcom, which will be neat. Okay, so then we have somebody here says John Deere layoffs. I'm looking for that to see that. I think they had layoffs announced during their earnings call. Let's see. I know there's a little bit of a slowdown on some of those. Those are also pretty interest rate sensitive, mostly because they're so expensive. I mean, you spend, $500,000 to sometimes multi-millions of dollars for these reapers and products. Mind Medicine. Let's see. Reports pricing of underwritten shares. What do we got here? Offering 16.7 million shares at a price of $6 a share, up 25% after having the price target raised at Oppenheimer to 25. What is this? Mind Medicine. I don't know if that offering is the same because that just says Mind. That might be different. So I don't think Mind Medicine is, because I just threw in Mind in the search here. Okay, so that might be an oopsie doopsie. But anyway, Mind Medicine gains on FDA breakthrough on designation and trial data. FDA has granted breakthrough designation to MM120 program for the treatment of generalized anxiety disorder. This is for, what are they called? Basically like mushroom, the chemical that's in mushrooms. I'm trying to think of it. I can't remember what it is. But that kind of product. Mind Medicine. Let's go here. Yeah, look at that. Oh, it's up 47% now. Look at it just take off from the bottom. Crazy. What a rocket ship. And you're up about 2.4 right now on end phase. And so, yeah, got a nice movement here. You've got Tesla's up about 1.5. Nvidia's up about 2.2. Apple's even up 31 basis points. Yeah, like psychedelics. That's it. That's what I was looking for. Exactly. Yeah, thank you. Y'all, microdosing, stuff like that. Yeah. Yeah. Psilocybin. That's what I was thinking of. Anyway. So. Okay. Good. What else? Okie dokie then. Let's see here. Let's see if there's any Tesla news driving this. Let's see here. Automotive guide. German plant expected not to have power until the end of the week. That's because of the climate sort of terrorism we saw there. Just so ironic given what Tesla's trying to do for the world. No power expected through end of week. It probably doesn't matter so much because I think Tesla's got enough inventory, so you're probably not really losing sales, but you will lose some production. But that certainly helped push Tesla down over the last few days. It seems like people are finally getting over that concern, or of the concern of that plant in Germany. Okay, you do have... let's see here. No. Okay, yeah, no, nothing really new there. All right, brief look over here, and we'll keep checking for some news.
I want to talk about
Down goes Faber. Down goes Faber.
Yeah, believe me. It's making me sweat just thinking about it. I'm going to have to step off and take off my jacket.
Maybe we ought to go back to the things that are happening in the market. Like
Can we do
Kroger.
that?
Biden plans to propose big tax raises for billionaires and corporate America. That's interesting. Biden administration will target billionaires and corporate America with sweeping tax rises as part of a plan to cut the U.S.'s national debt. These proposals are expected to be announced today at the State of the Union and over the following week, including increasing the minimum corporate tax from 15% to 21%, as well as including increasing the minimum corporate tax from 15 to 21, as well as a 25% minimum tax for billionaires. 25% billionaire minimum tax. Yeah, this is as an effort to basically try to gain some appeal before the election. Obviously, none of that is actually expected to happen. I mean, really, what's interesting is in the State of the Union, you can say whatever you want. Literally whatever you want. And yeah, we're going to plan to do this and plan to do this. Kind of like the campaign trail, almost. So, we don't really expect anything to happen at all, pretty much, in Congress, with the exception of kicking the can down the road on our budget expenses until the election, really. So I think that's interesting. All right.
And he like put it on the windshield. He's like, "This is for you, David Faber. Here you go." I'm like, "Thanks." What? Oh, it's a subpoena.
He gave you a subpoena?
Yeah, we got rid of it. It was for nothing. It was some weird class action
David, you've
suit.
been served.
I mean, you've been. How many times have you been
Don't even
served?
go. I
Yeah.
got served one night at Friday at 10 o'clock. I said, "Are you kidding me?"
I know.
That person didn't fare as well as they thought they would in that tussle.
All right, I want to actually talk oil and gas, not regulation, but joint operating agreements, because we did get news yesterday and then a follow through today on this important deal that we're watching in oil and gas, namely Chevron's deal.
Yeah, Powell's proposed remarks just came out for the Senate, exactly the same as what he had in the House, and will be interesting. I mean, we'll probably, we're just gonna go look. We're gonna do the course member live here soon. If you haven't yet, make sure to check on the at meetkevin.com. Prices for the tickets for the symposium. They are going up tomorrow at 1 p.m. And we'll update the website there with another speaker announcement, so that'll be fun. And yeah, hope to see you there. That's going to be June. Remember, it's June 21st to June 23rd. We're doing a pretty big event. Want it to be the biggest finance event of the year. I think it'll be pretty fun. Finance, real estate, and otherwise. Tax tricks, you name it. Whatever folks need in the world of finance at the time. That's what we're going to be covering. So, yes. Okay, let's take another look here at the sticks before we do go. Okay. Let's go here. So, Mind Medicine up 45% still. NVIDIA's 906. You know, it's really heading to 969. That's your next stopping point, which it kind of is kind of mind-blowing. It's really remarkable. And there was actually a piece this morning on fund managers starting to murmur about the NVIDIA bubble. Where was that? I thought that was interesting. I can give you a quick synopsis of it. I'll have it here in just a sec. They're calling it Frenzy for AI related. Here it is. NVIDIA bubble talk spreading. Concerns that NVIDIA's stratospheric gains might be unsustainable have spread to investment managers. Optimistic in long run, but recognize the valuation isn't exactly attractive. Yeah, no kidding. Some concerns that NVIDIA might end up a victim of its own success. This portends a bubble. Nah. I mean, their EPS will double this year, which is remarkable. But the question is the growth after that. I can't get over how low. I personally think the estimates are kind of too low. But if I look at the EPS estimates for growth at NVIDIA over the 4 years after this year, so ending in January, that's when their fiscal year ends. Let me see if it's changed yet. 18.6%, 9.8%, and then you go negative. Negative 2.3%, negative 7.9%. And some people might wonder, oh, how could you go negative with you know, increasing demand for chips? Well, it's simple. You go negative when you have to lower prices because there's more competition. It's basically the problem Tesla's facing right now. So that works out to an average growth rate over the 4 years after this year of just 4.5%. I mean, like, there's no growth. How could you have this company be worth as much as it is with no growth? I mean, Tesla's going to have more growth than NVIDIA, and that's saying something. But they probably have to go through negative growth first. That is leading some people to say that, you know, Tesla is going to have a rough Q1. But then again, if everybody says Tesla's going to have a rough Q1, maybe it won't. It always seems to be the opposite of what everybody thinks. It does seem like the market's rotating down a little bit now. You've got Eli Lilly, some big red candles here, probably because J-Pow is going to testify shortly. Yeah, you got the red candles over at Tesla. You're only up 18 bips now. Super Micro's rotating down. NVIDIA rotating down. Apple back down. CrowdStrike down. ARM is surprisingly up about 4.8. There's so little float on this. So few sellers. Hard to keep that one down. Target, SoFi, Intel up 2%. I like Intel. Yeah, definitely makes cash somewhat attractive when valuations start getting so high. What a lot of people do is you diversify and you increase your cash allocation so that, when and if things poopy doople, you'll be able to pick up some cheaper shares. I think a lot of folks are looking at lower numbers on Tesla maybe after earnings. There's not a lot of support, unfortunately, below where we are right now. Like your next Fibonacci support is the bottom, 101. But you do have this trend, which the trend line has been pretty decent for bounces. And that would stop you at about 150. Yeah, probably about 150 is your realistic next stop for Tesla is 150. So you go 150 divided by 176. That's 15%. That's painful. I don't know. Yeah, I hope we can get some beats out of there again. Same thing with Enphase, but it does just make you wonder. The only thing that's really happened so far in the last 6 weeks is interest rate estimates have gone down. We've gone from people thinking we're going to get 7 rate cuts to now everybody thinks it's going to be, 2 or 3, if even. And the autos have gotten whacked as a result of that.
Lost the lead.
Did it work? My button not work? I don't know. Maybe I just didn't hear it. Anyway. Okay. So, see what other last minute comments we have here. I fantasize about Tesla bubble talk. We have Tesla bubble talk at 160. Like a fantasy come true. Well, I don't know. I mean, it could stay stable at its fib. Bro, I got laid off yesterday. Oh, man, I'm sorry. What world were you in? Someone here says, when did the ARM lockups expire? That's on the 12th. 12th of March. So we're getting close. I agree with Troy on a rough Q1. And Wall Street hasn't priced it in yet. I was just looking at Bloomberg, and the consensus right now for company sales is still 490,000 for the quarter. Yeah, so if I look at that on the year basis, we're looking at 490, 518, 540.5, 573. That's consensus. 2.12. Troy's in the 1.9. So you've got a big miss there. Setting up at least. IT worked from home. There was no work. I should have looked, but didn't call. Didn't because I dread searching so much. That's a bummer. Thoughts on Embraer? I actually really like Embraer. You know what we should do in the course member live stream? Let's look at Embraer today. When is the Rivian event? Because everybody keeps talking about the Rivian event. I know it's today. Temu spending $2 billion on ads. That doesn't surprise me. Let's see when the 10 a.m. Pacific. Oh. Okay. All right. I could cover that if people want that. I could do that. I think that's reasonable. Let me see. I'll look at the schedule and see what we got going on today. Anyway, all right. I'm going to hop on over to making another cup of coffee, and then we're going to go to Course Member Live. So now I'm going to push this button, and of course, make sure June 21 to 23rd, you're in Vegas. We're going to when we make the location announcement, that'll be another price increase that we'll have at that time, is Vegas, obviously. And then, yeah, take it from there. Okay. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Kevin, when are you planning to do meetups? June 21 to 23. Come to the event. All right, I gotta go. Bye.